Almost every year, a lot of Canadians end up getting tax refunds. They then go right ahead to blow it all up on some kind of lifestyle expense or something that is not really going to add any kind of value at the end of the day. But how about you try something different for a change? Which is why in this video, I will be telling you what I do every year with my tax advantage accounts that help me reduce my taxes, which then leads to me getting more money in tax refunds, and then I go ahead to use this tax refund to make even more money. We have just a few days left before the year 2025 finally comes to an end, and if you pay attention to the things that I will be discussing in this video, do some of these things before the year runs out, and you continue to do them every year going forward, you will be in a better financial situation in just a few years. The first home savings account allows you to save up to $8,000 per year with a lifetime maximum contribution of $40,000. So $8,000 per year for 5 years gives you $40,000. Accumulated contribution room can also be carried forward, but you cannot contribute more than $16,000 in 1 year. It is important to remember that contribution room does not automatically begin to accumulate for you if you do nothing, just like the other accounts like the TFSA. Here, you actually have to do the bare minimum of opening the account first before you can begin to accumulate any contribution room. And here are some of the reasons why I think this account is a very powerful account that everybody should be taking advantage of. First, it combines the benefits of both the tax-free savings account and the RRSP. Any contribution you make in your first home savings account is tax deductible like the RRSP, which means whatever amount you contribute into this account, you can use it to reduce your taxable income, which also means that you get to pay less in taxes. Withdrawals from this account are non-taxable like the TFSA, provided you use that withdrawal to pay for your first home. You can also combine the first home savings account with the home buyers plan from your RRSP, which gives you more money to put down for down payment on your first home. This account is allowed to stay open for 15 years, and whatever you have accumulated can also be transferred to your RRSP tax-free if you do not end up buying your first home in that time period. Most people will not even be able to buy a home here in Canada, which is why I am prioritizing this account first and then using whatever tax refund that I get to fund my tax-free savings account. And I do this comfortably every year, knowing that whatever I have accumulated in my first home savings account can be rolled over into my RRSP in the future tax-free. Here is a perfect example. I have been saving and investing $8,000 every year since 2023 when the first home savings account was first introduced. And by 2027, I will have saved up $40,000 in my first home savings account. And using a modest 10% rate of return, I could easily have over $100,000 available to me to put down as a down payment for my first home. Should I choose to buy a home here in Canada? Should I choose not to buy a home, everything is moved into my RRSP towards my retirement. The RRSP is an account that is designed to encourage everybody to save and plan for their retirement. And whatever amount you contribute into this account can be used to reduce your taxable income, which also means that you get to reduce the amount you pay in taxes. And here, everybody has until March 2nd of 2026 to contribute towards their 2025 RRSP, which is 60 days from the end of 2025. So if you contribute anything before March 2nd of 2026, that amount can be used to reduce your taxes for 2025. Contributions to your RRSP is used to reduce your taxable income immediately. You can also control when you get to pay that tax, and ideally this is when you retire, where your income is most likely lower. Investments in your RRSP grow tax deferred until withdrawal, which means you do not get to pay any taxes until you begin to withdraw money from this account. Personally, what I try to do every year is to save and invest in both my first home savings account and my RRSP to get me about $3,000 to $5,000 in tax refunds, which I now use to fund my tax-free savings account. And by doing that, the money I get today in tax refund can just sit and grow in my tax-free savings account tax-free for the rest of my life. I don't get to pay any taxes on whatever growth I have accumulated in that account. This account allows you to invest and grow your money tax-free. It does not provide any immediate tax benefits, but can save you a lot of money in the future since your investment gains are not taxable. This is the second most important account for me after my first home savings account. Any unused contribution room that you have in this account can be carried forward indefinitely. Use this tax-free savings account calculator to calculate how much room that you have accumulated so far. Link in the description. The TFSA contribution room for 2025 and 2026 is $7,000, so take advantage of it. This account is used to save for your kids' college or university education. Contributing to this account will mean that your kids do not have to worry about student loans for college or university, and this will be giving them a huge head start in life. Contributing to the RRSP also gets you free money from the government. Everybody can get up to $500 every year for every child from the government, depending on how much you contribute. This amount is a grant, and the lifetime maximum of this grant is $7,200. And there is also a lifetime contribution limit per child, which is capped at $50,000. If you don't contribute in a year, you will be missing out on that $500. You can, however, catch up later, but only 1 year at a time, since the government only pays a maximum of $1,000 per annum in grants. For example, if I contribute $2,500 into my son's RESP before 31st December, I will get the full $500 in grants for 2025. But if I decide to wait until next year, now I have to contribute a total of $5,000, which can also be very difficult at times to catch up. So even a small contribution every year will help you get that 20% from the government. If I can't contribute up to $2,500 for this year, then even a $1,000 contribution will get me 20%, which is $200. So you now see how using all of these accounts in combination can be really helpful towards building wealth for the future. I usually start by contributing to my first home savings account or my RRSP, and then whatever I contribute, I use that to lower my tax bill. And what I then get in tax refund, I can now use to fund my tax-free savings account. And that is what I do every year, and the cycle continues. I get to pay less taxes now, and then what I get in return, I use it to invest and save for the future, and whatever growth I am able to accumulate in my tax-free savings account, I do not get to pay any money in taxes on that money. So hopefully you found this video helpful, and if you did, hit the like button, subscribe to the channel, and feel free to share this video, and I will see you in my next video.